Okay, everybody, here we go. It is me, Gregory Mannarino, and this is my newest segment of Markets A Look Ahead. It is Sunday, September 25th, 2022. What you and I clearly need to look at, pay attention to, from here forward, are essentially two things, or maybe it's just two parts of one. And that is the action here in the debt market. If you're paying any attention to at all to the mainstream propaganda ministry, they're on the bandwagon too now, talking about this global sell-off in debt, how bond yields are rising and it's frightening, and what's the market doing, and the dollar strength here. Look, understand what you're looking at here. I've outlined this for you, I don't know, maybe for an entire decade, how global equity markets do not act independent of themselves. It's all dependent on debt market action. That's the key, the absolute key. Now, what we have seen as of late is pretty profound, especially over the last several days here. This 10-year yield ballooning, global bonds selling off, yields rising here, and the core. The bigger deal here is, you know this already, is a liquidity problem. The market is already illiquid. Okay, it demands more cash be fed into it every freaking nanosecond of every freaking day. So when you have a situation here where debt is selling off in mass, okay, causing global bond yields to rise, I can't stress to you again what a problem this is. And, it is thankfully getting some attention even on the mainstream. They're so behind the curve, but they have to talk about it. They have no choice here, because I don't think people are as stupid as they believe they are. They think you're an idiot. I know you're not an idiot. I know you're paying attention to what's going on. I know you realize what's happening and how the debt market is the key. Now, look, understanding that the dollar, for example, is also a unit of debt here, along with every other central bank issued note. People, what are these things what is the root of all central bank issued currencies? These are all unbacked liabilities being dispersed by central banks under the guise of a bankrupt government. Here in the United States, it's a joke on a monumental scale. The United States is the most indebted nation in the world by exponents. Nothing comes close to it. Okay, but how are we maintaining this status where things continue to run? Because the US dollar remains the world reserve currency, and we issue debt in the form of these bills that are central bank owned to the entire freaking world. And let me tell you something else, how that works, in case you don't know. It's being that the United States dollar is a unit of debt. Okay, let me ask you this. Okay, what do you believe is the number one product that the United States exports? Is it commodities? Is it, I don't know, come up whatever you want. What do you think it is? Think about it for a moment. Think about the question. What is the number one product that the United States exports to the world? Here's a clue. Via its central bank or the Federal Reserve. Bingo, exactly. Inflation. We export inflation. It's our number one product, thanks to the Federal Reserve. People, look, let me put this into more of a perspective for you so you can really understand. Look, the core of the financial system, first of all, it's the most perverted, twisted, upside down, rigged thing that doesn't even exist, because it's not on the elemental chart here, okay, in the history of the world. But meanwhile, the entire global financial system is based upon the relentless acquisition of debt in perpetuity. Can never stop. It can only grow. So when you see a mechanism like this where global bond yields are selling off, this is something I've warned about literally for over an entire decade, saying at one point we were going to get a meltdown in that debt market, which may be happening right now. I don't think this is a controlled sell-off anymore. This clearly looks like an uncontrolled sell-off to me. You got the dollar here, this knee-jerk higher into the dollar, and the whole world is talking about it, even on the propaganda ministry. What's going on here with the dollar, relative strength of the dollar? The absolute strength or its purchasing power is dissolving, and it's going to get worse. By design, it's a mechanism. It's just the way it works here. Okay, but you're going to get, this policy and this act and another reason to pull cash into the now from the future, which is inflationary. You're not allowed to know that. You're not allowed to know any of this stuff here. They believe that you're an idiot. I know you're not an idiot. But anyway, like I was saying here, the mechanism is relentless and it can't stop. So when you see this action here and you see this phenomenon of the dollar going higher and higher, its relative strength, that is such a major tell in Greg Mannarino's book, and I'm sure yours as well, that something is definitely wrong here. So let's put this together. We have been witnessing a global sell-off here in the debt market for weeks. Okay, it's starting to accelerate. It's getting worse. Look, on Friday, we witnessed a little bit of a phenomenon, okay? That phenomenon was we had that 10-year yield hitting 3.75, okay? Then all of a sudden, by some miracle, okay, it did come down a little bit. Now, there's only one reason on the planet, off the planet, or anywhere else that would happen. That's the Federal Reserve buying debt, okay? Period. No one's buying it. It has to be the Federal Reserve. If you, for example, let's say tomorrow morning, market opens, and we're seeing the 10-year yield drop, who's doing that? Is that the average guy or the average girl saying, oh, I really got to buy debt right here and right now? Absolutely not. That is the Federal Reserve. You're not allowed to know that. Again, look, this is not a real market. The market is completely managed. You know this. I've been telling you this for years here. And, I'm surprised a little bit, no, maybe a lot of it, that the Federal Reserve has not done more, okay, to keep the 10-year yield from rising in an uncontrolled manner as it is as of late. Because, look, believe me, you and I are not the only ones paying attention to this anymore. Now it's getting attention on the mainstream. People are going to get rattled. People are going to say, what's going on here? But again, look, this goes way, 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 way beyond what the stock market is going to do. The stock market is just an element here, which has no basis in reality either. There is no price discovery mechanism behind the stock market at all. It's all about inflating debt or debt that is selling off right now. And that's causing the stock market to waver around. A lot of pressure on equities right now, back in bear market territory with regard to the S&P 500. The Dow is barely out of bear market territory. And if this continues, look, you and I, we got this covered from every angle just looking at the stock market here. That is, for example, let's say tomorrow morning, you continue to see the 10-year yield rise, global bond yields rising, debt selling off, dollar strength. What do you think the market's going to do? It's going lower. And it could be profoundly lower depending on how fast that 10-year yield rises. Remember, it's not really the number. It's the pace at which the debt market is selling off. Again, and you know this, what is the debt market supposed to do? Bingo, exactly. It's supposed to stay stable. You're not supposed to see the action that we're seeing now. It's just a big tell that things are going south. People, what else did we find out last week? Every single forward-looking economic indicator is negative and getting deeper in the negative. Okay, so what do we know is going on right now? We have a global economy being driven like a pile driver into the freaking ground by central banks who have no interest at all in doing anything to help the people. All they're doing is creating slaves. You know this. Nation slaves and individual slaves to the system. It couldn't be more easy to understand here. Why are they doing this? Because they need people to be dependent on the system. Period. Okay, that's why they're wiping out whoever's left of the middle class. Look, the rich people and the well-off, they're going to stay that way in any kind of an environment. They're going to stay rich, they're going to stay well-off, while the middle class gets destroyed, pushed down to that lower rung of society. Okay, and then the big climax here, millions of people are going to die. Okay, and they're easy. When there's less people, it's easier to control. The debt bubble, the debt issue, people, is the greatest threat. The greatest threat, bar none, to mankind. Forget about nuclear war. Forget about global warming or anything else. This is the real danger. When the debt bubble pops, and it looks like it might be right now, and look, we're going to know. We're going to know relatively soon. This isn't a shock to you or me. You and I are watching global bond yields. You and I are watching the 10-year yield. You and I are paying attention to this phenomenon of dollar strength lately, and it's all summed up where? Where is it all summed up where everyone can look at it, and it's gotten out of control? In the MMRI, Mannarino Market Risk Indicator, free to everyone on the planet who wants to look at it. Link in the description of this video. Okay, we hit a new all-time record high with regard to the MMRI just on Friday. Okay, and then of course, the Fed stepped in, started buying some debt. They're getting nervous here. And they're getting nervous because I don't think they're done. All right, either that or it really is getting out of control, which is distinctly possible. The end game is very simple. The end game here is a complete and absolute total implosion of the financial system, not just here in the United States, but globally. Central banks who do not coordinate with each other. Remember what Yellowstone Powell said. He goes, oh yeah. Oh, I'm talking about the Fed chair in case you're new here. Yes, I refer to him as Yellowstone because he's a freaking dark, stinking, putrid stain on the earth. He's a human stain. Anyway, this thing over there, okay, said he talks to other central bankers, but they don't coordinate. Oh, they don't coordinate, which means, of course, they do. They are coordinating. This is a deliberate, coordinated effort to bring the world to its knees here. They have no interest in fixing the economy. I don't care what comes out of its mouth, it being the Federal Reserve, any other central bank, a central banker. They don't care. Okay, they're on a mission to destroy an entire class of people. They're on a mission to wipe out the global economy. They're on a mission to destroy the current financial system in its current form, to issue in a new system of maximum control. I think it's pretty obvious here. And to greatly reduce the global population while this happens. It's going to be biblical, people. Biblical. I don't know another way to put it. So anyway, in summary here, let's put this together. You and I don't have to guess about a damn thing, okay? All we got to keep our eyes on seriously is the MMRI, okay? What's the MMRI doing? Why is the MMRI so important to Greg Mannarino and hopefully to most of you who get it here? It's a simple equation involving what's happening with regard to the 10-year yield and the relative strength of the dollar with a little cute little mathematical equation that comes up with a number. And that number is reflecting the action in the debt market. So if you don't want to follow the 10-year yield, you don't understand it, you don't want to follow the relative strength of the dollar independent of each other, well, I put it together for you, all of you, for free. In a little equation. There's no sign-ups, there's no anything. Just click on the link in the description of this video and bam, there you go. You know what's going on. There's no guesswork here. If the MMRI continues to rise, risk is rising in this market. We're in high risk. We're knocking on the door of extreme risk. Now, I've been telling you, what have I been saying? If you are still long this market, you either need to be hedging those positions via, let's say, a dividend that is paying you, which is a nice hedge, or you need to be thinking about protective puts on these until this rides out, or get out of the market altogether, okay? We're not going to deviate. Betting against the debt, becoming your own central bank here, holding hard assets, physical silver, most favorite of all time. You know that here, okay? But the bigger picture is, look, the markets are what they are. They're going to do what they're going to do, and there's no guesswork. We know, what's going to happen by just watching a few little metrics here. The global economy is going to continue to get worse. You're going to continue to get fist-fed bullshit about how great our economy is, how strong we are. It's all propaganda and it's not true. Meanwhile, every single forward-looking economic indicator is negative and getting worse. But they're still going to try to convince you that things are getting better. That's what they always do. You understand? So what does this mean for you? How are you going to keep yourself on the right side of this? From every aspect, you got to consider these things, and you always have to be prepared. I know you are if you follow this blog. Prepare for a worst case scenario to unfold. A worst case scenario meaning a bursting of the debt bubble, a massive resource problem that's going to come out of that, and the outcry of people in the streets is going to be unbelievable, incredible. Seriously, that's the only time they're going to take to the streets. Right now, they're all boiling frogs. They don't know what to do with themselves. They're allowing themselves to be destroyed. It's called learned helplessness. People believe they can't do anything about it, so they do nothing. Okay? You and I, what are we doing about it? At least we're paying attention to this. If you are a follower of this blog, you know exactly what's going on. And you're part of this family. This isn't my thing. This is a big worldwide family, and you're talking about this stuff. You're getting it out there. You're sharing these videos, and you're paying attention. I don't know. I really don't know what else to say. All right, people, look, that's pretty much it here. Important video. I covered a lot of things. Please comment. Let me know what you think about all this, and get it out there. I will see all of you in the morning. I honestly can't wait. The first thing I'm going to do tomorrow morning, is see what that 10-year yield is doing, which can change in the blink of an eye, right at that opening bell, which did happen recently. My video titled Fake Out. I mean, that was, I did that several days ago. Go pay attention to that one if you haven't seen it yet. All right, people, look, I'm out of here. Love you a lot. Have a great rest of your day, and I will see you in the morning.